two guys hanging out on a Wednesday night with nothing better to do, right? Than to talk
We
about.
just want to talk shop and
Yeah,
insurance. Who doesn't
yeah.
want to do that?
No, exactly. No, well, I thought we were talking about like walnuts and almonds and cashews and just like
Yes, yes.
seeds and
All
nuts.
the food things, fun things, healthy things we think as well.
Exactly, maybe avocados, right? Which is funny because I probably just named like five different startup companies.
Exactly, exactly.
Yeah, there is a
You got to nail a fruit or a vegetable. Somebody else posted, and because there's like acorns in the
yeah,
space, so nuts are definitely a thing.
yeah. You know what though? It's catchy though, right? And it's memorable, and hats off to the person who gets the name first. So, I don't always jump into the company stuff right away, but like Walnut, that must have been a hard name to grab. Were you the only one out there? Or are you the first with Walnut in the name?
And there's actually other applications that are using Walnut, and everybody has like a slightly different URL. Some are using it as like purely an app. So if you search in the App Store, and we're web first.
Yeah,
So I would say, these generic, keyword style names, everybody wants to be known for, and it's
yeah,
pretty popular in the insuretech, in the fintech, and sort of in the startup space to,
yeah,
associate yourself, with something maybe more physical, more tangible, and memorable for people. And I think, we were talking about it before. It's how
yeah,
do we make ourselves a little bit different than everybody else out there? Nobody
yeah,
wakes up in the morning and says, I love insurance. I'm going to buy
yeah,
life insurance or auto or home or whatever
yeah,
today.
yeah,
I'm really excited. So how do
yeah,
we, become more like, a lemonade and be able to
yeah.
change the focus a little bit of the brand and try to bring forward that sense of excitement, energy, and enjoyment?
Yeah, 100%. And a little less insurance in everybody's life isn't a bad thing, right? So it doesn't have to be
Exactly.
the thing that you lead with, right? And I always say when I make comments like that, it's like I'm criticizing my own family. So I've been in the family long enough. I can do that, right? And I think you're in a similar boat here. So that's and as far as the insurance game is concerned, I'm not aware of another Walnut Insurance. Hats off to you for beating the others to the race on that one. I'm sure there's some people that are have this sit
Yeah,
back and
no,
get back to the drawing
thank you.
board.
Thank you.
Yeah, yeah,
We've got some good feedback on it. We think there's actually great connotations, just in terms of if you think about protection. People think about walnut as having like a shell of protection, and then the
yeah,
good stuff is sort of inside. So we believe that there's all sort of other
yeah.
value that we can sort of associate with the name.
Oh, I love that symbolism. That's fantastic. And you guys have on your logo. Is there a squirrel in your logo?
Yeah, yeah. There's a squirrel on the logo. So we
Yeah,
actually talked about this too. It's sort of like, if the protection is the thing that you need, but maybe the part that's not as sexy, it's the
yeah,
squirrel that runs around that gets all the action.
right.
And that's what we want to bring a bit to life insurance. It's how do we give you a set of benefits that you can use today? So there's the protection component, and then there's
Yeah,
other things we can give you to help you live your life. And that's really how we think about it. We try to make it more holistic, something that's a bit
yeah,
more valuable to your day-to-day life, in addition to taking care of friends and family. And it's
yeah.
really a selfless act to buy life insurance. So,
Hmm.
we might all want to be a little bit selfish and get a little bit of something in return. And if
Right.
everybody, lives a bit longer because they're healthier, better mental wealth, better digital
Yeah.
security, that's a win for everyone.
That's awesome. And yeah, squirrels gather things together, right? That are important. So that's there's lots of symbolism. I always have fun unpacking the meaning behind brands. So that's really cool. Thanks for sharing that. So other than having talks on a Wednesday night, what do you do to keep busy? What's your latest and greatest crave or addiction or your new favorite hobby? What do you do to keep your mind level and occupied outside of running a startup?
Yeah, these days it's hard. We're just, I guess, coming out of the lockdown, so it's really about my
Mm.
kids. I have two kids. I have a 10 and a 7-year-old. So they're running around, and they are homeschooling because everybody has to sit in front of the screen nowadays, even for school. And so I'm
Yeah,
just keeping busy with them. Every night we do a bit of baseball outside. Hopefully the summer will open things up, and it'll be a lot of fun just to get back out there and sort of do things in the outdoors.
Yeah, kids do keep us a level and balance, right? That's really important. I got 4 at home myself, so I understand that, and we can be running around like crazy sometimes, and it's good to see the world through their eyes, right? It gives us new perspective. So that's a great way to spend your time. That's an excellent way to spend your time, actually. So,
I think, these days, I think it's challenging for them. It's challenging for parents when, the kids are running around at home too. And hopefully everything will go back to normal in the fall. But sort of goes back to highlighting everybody wants to take care of their kids and make sure they're well, but you got to take care of yourself as well.
What do the kids think of Dad running a startup? Like, do they know? Like, I know my kids over here. Some of my conversations, they're not here today. I'm away from home right now, but do they ask questions? Do they understand what you're doing and why you're doing it?
Yeah, I think my youngest daughter, because I brought her into work a couple times. She's like, "Oh, yeah, I was at RBC previously for 3 years." She's like, "Why did you leave RBC? It was like, great, and it's like a tall, shiny building, and everything is there for you and well set up. And I'm working from home, scrambling to get everything together." So she thinks, maybe startups are a bit of a dangerous game. But you get the opportunity to go and make an impact, change the world, do a little bit something that's different. So the kids are aware. Hopefully, we can be a success story that they can be proud of. But at the very least, to have the entrepreneurial skill set, I'd love to be able to impart that on them as well. But you never know what's going to happen these days. Jobs are not as durable as they used to be. So being resilient and being able to, think outside of the box, I think is super important, even if you're working with more traditional employers.
Yeah, and they don't really teach it at school. Like, there are entrepreneurial studies courses in high school and stuff like that, but there's no better way to learn, how to run your business than to watch somebody else and I think as parents sometimes we underestimate the influence that can have on our children. The other day, my oldest daughter, who's 14, and she's very artistic, and started making her own jewelry and said, "Dad, I'm starting my own business." And the funny part was 6 months prior to that, she told me, "I want nothing to do with business because I'm an artist." So it's kind of funny how sometimes, and I'd like to think I had some influence on that, but and it's funny you mentioned, we're both part of the RBC alumni. I had the same reaction, actually, because we travel the country quite a bit as a family, and every time they'd see an RBC branch, even though I worked mostly at the head office, they would say, "Oh, Daddy, there's your work, there's your work." And so every city we went to, there was Daddy's work, right? And when they were children, they thought, that was my physical workplace.
That's amazing. Yeah, exactly.
But when I left, they didn't understand either, right? And I said, Daddy had great memories there, but there's new challenges, and it's okay to take on new challenges, right? And sometimes make some of your own rules too, right? And maybe rewrite the book a little bit. So I'm really excited to get into that. So we talked a little bit about Walnut, the meaning behind the logo, the brand. I'm not sure. We unpacked a lot of that, but the last question I'll ask is the color. Was there any reason for the color scheme?
Yeah, well, I think we just, back to this notion of, there's a lot of what we would say maybe more, boring insurance websites that are, just the standard colors, the colors of trust and so on and so forth, which I think is great. But, how do you sort of stand out from the crowd? How do you represent something different? So we are trying to get across that we have a little bit of a different take on it. Mm-hmm. We are still providing and we're still working with, the carriers that have that trust and have that history of being, reliable and being able to follow through on their commitments. Yeah. But we can, bring forward some of the modern experiences that we think are sort of missing in the market. We can come out with a bit more of a digital centric, approach to all the consumers that have grown up with like the Netflix and the Spotify's of the world, used to buying subscriptions. I'm deeply passionate about subscriptions. And I think insurance is just one of those subscriptions that people actually don't think about as subscription, but has all the hallmarks. And if we can, bring that a little bit to the forefront and make them just a bit more passionate about it, there's a lot of room to create sort of new markets and get people insured at a younger age. And all the math supports that. If you get insured younger, you're less likely to, sort of disqualify through the process. You're going to get, less friction in terms of being able to sign up without having to do a medical. So it makes sense to go after a younger audience, be able to earn their trust, grow with them over time as they buy a home, as they have kids. I know I was probably late to the game. I had kids and I didn't go out buy, incremental insurance, partly because I didn't want to go through the hassle of, having to sit down for a couple hours and explain my life story. So there's a bit of it is like scratching my own itch and being able to check off some of those boxes that I know was important for me to do. And I wish there was a solution that was available for me at that time.
Yeah, so let's get into that, because we can go back and into your origin story later, but like I think it's really relevant to stay on this topic for a second. So I don't know everything, and I want to hear it from explain it in your words. It sounds like you've really brought that experience to the consumer through a subscription-based model, through almost like a membership model. Help us understand that. So what's the business model, the framework that you're delivering to the end consumer that's different, that makes the experience different than traditional?
So I think we do a couple things differently, and this goes actually back to the origin story. So the really quick 30 seconds on the origin stories. I was working at RBC Ventures, and we built this application called Butter to help people organize and track and manage subscriptions. And one of those subscriptions that people didn't really think of as a subscription is back to insurance, but all the hallmarks of insurance and how do we bring that a bit more to the forefront. And so the experience of purchasing subscription, if you go to Netflix, if you go to Spotify, it's pretty simple. You go and pick a tier, you put in your payment information, and you're good to go, and you have value basically right away. So our goal was to bring a bit of that to the life insurance space. And I would say that life insurance, there hasn't been a whole lot of innovation these days, and we're doing a couple things like really differently. One is you select your price first. So in all the other, flows and funnels that are out there, you always get asked personal information. They want to know first name, last name, address, and all of that. And then they'll typically ask you, how much coverage do you want? And I think for most consumers, they don't actually know how much coverage they want. And then it'll sort of spit out a price. So we've flipped it. We actually say, hey, what's the price point that makes you comfortable? What would you like to spend on a monthly basis? Is that $10, $15, $20 a month? And then we actually back solve. We ask you your date of birth. We ask you male, female. We ask you your first name, last name, and location. And we're back solving to get the amount of coverage. So you actually get an even monthly amount that you can afford, which might be $20 a month. And you get an odd amount of coverage that could be, $246,972. So we flipped it around the whole funnel. The second thing we do is we give you added value. And this is the part where we were thinking, why don't people, purchase today? Younger consumers, could purchase with a couple clicks. They have, good health. It should be easy for them. Why aren't they doing it? And part of that is there's no reason for them to do it today. No reason for them to get across the line today. So that's where we went out and we partnered with 3 companies, Dashlane for password management, digital security, ClassPass in order to be able to have digital on-demand fitness, streaming audio and streaming video. And then thirdly, with Headspace for mental wellness. And so it's designed to be digital security, physical fitness, mental wellness, and life insurance. It's a holistic bundle to help people live their lives, and they get that value today. And if you look at the totality of the bundle, which is the membership that you were talking about, it's basically unbeatable value, right? Our goal is to make it a no-brainer for you, give you so much value that you get in this bundle that you might as well just get life insurance, check that box, and you get so much value from the other products and services that it's just like highly valuable, in all 4 sort of aspects of your life. So that's really our goal, is to flip the model around, make it easy for people, and to give them a tremendous value up front to be able to earn the right to have that discussion with them later. If they need more coverage, if they need, whole life, universal life, we'll refer them to the right parties. We're only doing, group and term life online.
Okay. And did you start by flipping, or like almost inverting the process, starting with price first? Was that based on a problem you identified that, like, did you feel through research or something, or just through experience, that the average consumer shies away from buying life insurance because they think they can't afford it? Why?
Yeah, great question. So there's actually lots of studies out there, like LIMRA has done one where millennials in particular thought term life was 5 times more expensive than it actually is. So we think there's, broadly speaking, three areas, that we want to solve. One is this idea of it's too expensive, which is just not true. So it's really just bringing that to light and trying to be able to show them that they can have a valuable term life policy for, $20 a month, $15, $10 if you really wanted to. Two, they're not getting, that value today. So that's why we're bringing that to the table, Headspace, Dashlane, ClassPass. And third is this idea of trust. So it's traditionally not as attractive and doesn't make a lot of sense for traditional brokers to go and sell to this millennial audience because, the premiums are not as attractive. So they don't, get, as much of a focus as other groups. And, when they do have those discussions, millennials, and I would say a lot of consumers worry that they might be getting oversold. So we're more like, make sure you get covered, make sure you have baseline. You want to be able to cover things like funeral expenses at the very minimum. And then, we'll grow with you over time. We want to earn your trust. We want to earn the right to your business down the road. We don't need, and we don't think it makes sense to sort of start with the Cadillac, especially for these younger folks that don't have as many obligations, might not have kids, might not have a mortgage yet. But we'd love to get them started on that journey. So when they get to that point, they have a default place to come back to.
So I think I read somewhere, is your target market between 20 to 35, or was that just one particular product I was looking at? Yeah,
so millennials and younger. So, I'm stretching it maybe the tail end of the millennials. I'm 39. So, sort of like me and younger would be our target demographic. We think there's a tremendous number of underserved consumers in that group. Because traditionally life insurance consumers just a little bit older. So there's lots of opportunities to sort of engage at a younger and earlier point in the cycle. Which makes a lot of sense. So you talk a little bit about this. So the life cycle, there's, a lot of insurance companies out there that talk about client journey and being with the client through the different stages of their life and providing great advice. And that it all sounds good, but how do you really do it? I think it comes down to the delivery. So one thing I took out of my research on Walnut was you seem to have everything that I might buy as a Walnut member. I can see in like a client portal, almost like an online banking experience. Is that fair to say? Yeah. So traditionally, if you buy a life insurance policy, if you do get across the line, there's typically no post engagement because why? There's no reason to. It sort of sits on the shelf. They might mail
throw it in my file cabinet and I never look at it again.
Exactly. So it makes it hard for them to come back and to ask you about life changes and events. And if you do it in a digital format, though, what you get is that ability to sort of scale with the technology and with the cadence. So we can come back and ask you if it's quarterly, every, twice a year, annually, did anything change in your life? And we can do that in a scalable fashion because it's all built on a technology platform. And we're giving you a reason to sort of engage with us because you have access to these member benefits. And over time, we're just going to add more. We're just going to give you more value and more reasons to come and engage. But if you, come and get, Dashlane from us, like you could be using Dashlane and you don't have to use it, via Walnut. You just use Dashlane yourself. You could be using that, every single day. And hopefully in the back of your mind, you'll remember as the monthly premiums come out of your bank account or out of your credit card, that's where you're getting that value from. So we still want to be able to help you holistically in your life. We don't have to hit you over the head with it because we don't think, life insurance is not going to be a daily engagement piece. But we want to be there for you, and we want you to know that we're providing value through some of the products and services that we offer. And you'll be able to go and log into your portal and be able to access these benefits. You'll be able to see the amount of coverage you have and so forth.
Which a lot of carriers still don't do. It's amazing. So is it direct to consumer right now only, or are you positioning this to eventually just sell through advisors, or is it strictly direct to consumer?
Yeah, we actually view this like wholly as a partner business. So we will have direct to consumer, but we believe the majority of our business will be through partners. So there's different partners of different stripes, and we already have a handful signed already. Can't name them just yet, but we have a fintech, that we're onboarding and hopefully get out in the next couple of months. We have a community bank. There's PNC broker that we're working with. And they all have different, reasons. And the life events is another one, whether it be an online will or even a platform where, they're having a kids sports events and so forth. So typically they want one of two things. They want the ability to ultimately, generate more revenue, or they want the ability to have greater retention. So that's where this sort of B2B focus comes into play. We have the ability to embed the Walnut membership into existing products and services. So imagine if, you're paying for something that's, $20 a month, you could embed a Walnut, group life plus Headspace Dashlane ClassPass combination into your product. Or if you're, targeting against a specific database of users because, you have parents on the platform and parents could use, that term life coverage, and you have data about, how old they are, or if they have a home or if they have kids, you could target those users and pre-quote them or just send them over to Walnut to be able to take them through the journey and also tell them about all the value added. For traditional life brokers, we would even say, like, our view is that it's cohesive. We are targeting different customers. We're going after younger consumers. And if, they want to work with us, what we would do is we'd actually spin up a co-branded portal. They can send consumers that maybe want a fully digital experience to be able to go through the portal, and we'll, keep their brand, in the platform. So that they can grow with the customer. They can continue to engage the customer over time themselves as well. So it's really, viewed as a partner business. We think there's all sorts of partners that have not thought about, including or embedding life insurance into the flow of their product or service. And that it makes a lot of sense. There's all this discussion about embedded insurance these days. And I actually worked on at RBC a project called RBC Pay Plan, which is a point of sale lending product. And point of sale lending, the Affirms, the Afterpays, the PayBrights of the world have basically taken over the retail world, partly because it's in path. It's part of something that they're already doing. And we think we're just going to see more and more embedded insurance. And that's the area that we want to enable. That's the space that we want to play.
Very cool. And you know what I just realized? I didn't do your proper intro. So who am I talking to right now? It's Derek Zito. And Derek is the founder and CEO of Walnut Insurance. So I'll do an intro.
Thanks, John.
I'll do an intro.
Thanks for having me.
Anyway, but that was quite the warm up, eh? Like, we're just getting started now. So where do you want to go from here?
I guess you're going to have a lot of editing work, I think.
Oh, no. I don't care about the order. I said from the beginning, organic is good. That's my fault for missing you. And maybe we went straight into walnuts, and then we started talking about protection and squirrels, and we kind of went on a bit of a tangent. But that's good, right? People are learning. If anyone's listening, or the more people that are listening are learning about this, right? And it should be something that is interesting. So, nothing is scripted here. Sure. This is just two guys talking, right? So talking about something pretty cool. So going back to, you got my attention on the Dashlane, the mental wellness piece, the Headspace. Can you talk a little bit more about that? Because I think that's a real big point of differentiation. Help us understand that a little bit better.
Yeah, we think about this as a bundle to help you live your life. And so it's a membership that includes insurance and non-insurance components, the insurance component being a group or an individual term life, the non-insurance components, or we talked about Dashlane, Headspace, ClassPass. And these are covering sort of different areas of your overall health. These days, everybody's work from home. If you're an entrepreneur, your home and your work computer, everything gets sort of blended together. So the first thing, the easiest thing you can do to take care of your digital security really is a password manager. And with Dashlane Premium, you have the ability to use it on as many devices as you want. And you can actually pass off passwords to loved ones in case you die. They have an emergency password access system. So if you wanted to give, your wife or important people in your life, access to your Facebook photos or your passwords to access, cryptocurrency is another one that we sometimes talk about. This is a way to be able to pass that off in a secure manner. Second, is ClassPass Digital. This is their digital video audio on-demand streaming platform. So you can actually get, classes that you can stream, and you can work out, to, at home or outside as you're running, you can listen to the audio. And this is just part of holistic health. If we can get more people out there and being physically fit, I think that's actually net good, for everybody. It actually is aligned to what insurers want. Insurers want people that are healthy. And it's actually great in life insurance. You want to be healthy as well because you want to live longer. So everybody is actually aligned. And then mental wellness with Headspace is sort of the same idea. Headspace is incredibly valuable these days, especially in a situation where people are sort of locked down. They can't, go out and see their friends and family as much. They can't go out and sort of socialize in the traditional manner. Having, a way to be able to manage your mental health, even people that are working from home, there's all sorts of reports saying that they're actually working a lot more than they used to, just because it's not as clear, how you and when you sort of disconnect. There's no, commute that sort of transitions you from the work to the home life. And so now people are burning out. And so, how do you be able to go manage your mental health as well, for yourself, but also for, your kids and your family. So we just view these things as being something that are cohesive and important to work together. And from a risk perspective, the people that are interested in mental health, the people that are interested in physical fitness, the people that are interested in digital security are good risks for the insurer to be able to go and take.
Very cool. So is this all integrated into one ecosystem or one digital app where I kind of go to Walnut for everything and then you can take me to the wellness?
Yeah, we've consciously worked with top brands that people know and love, so that they can come to us to be able to acquire the bundle, but then they can just use these products and services independently. So as an example, there's no data that's being shared about what you're listening to on Headspace or what classes or how many classes you're doing in ClassPass. It's not designed to be we're not trying to suck all the data. We're trying to actually help you, live a good life. And to the extent that we can, basically use data for good, if we can encourage you, because we haven't seen you, sort of activate your access to ClassPass or Dashlane or Headspace, we can encourage you to do that. But, after that, we want you to be able to use it without having to worry about, somebody sort of looking over your shoulder.
Right. Are you thinking about going into other product lines outside of life? That's where you're starting, but is there, CI&D?
Yeah, we actually have a cyber membership bundle as well. We call it digital protection.
I saw that actually.
So this is similar themes to some of what we've talked about so far. Everybody's working from home. So your digital footprint is actually just getting wider and wider and wider. You're spending more time online, and the computers all getting blended. I know my son plays with my computer all the time, and so I don't know how great that is from a digital security perspective. But I'm sure it happens in everyone's household. And the other things we've paired with that is to be able to give people access to a 24/7 legal service through a service called My Friendly Lawyer. So, you could basically pick up the phone 24/7 in English and in French and be able to get legal advice, and they'll refer you to a person in sort of the right area of practice. If it's, employment law, if you have, neighbors that are, causing you problems and want to know how you might be able to deal with that. You can call the service and not have to worry about a big bill at the end because it's included in your bundle. And then the insurance and the protection component of that is provided by Cyber Scout. So that's where you get up to $1 million worth of fraud coverage, but you also get very specifically $25K worth of ransomware, $25K worth of social engineering. So ransomware has been in the news. It's top of mind because of the Colonial Pipeline, for instance. But it happens every day to individual consumers who, maybe installed something they shouldn't have, and now they're getting asked and sort of blackmailed to, provide, cryptocurrency or other payments in order to access their data. So ransomware is a growing trend, and there's some stats out from the CIA in the U.S. saying that during the COVID period, it's ramped up dramatically just because your footprint is so much larger than it used to be.
That's very, very comprehensive. Is there anyone else in this space that you're aware of in Canada today? Or Is Walnut the first?
No, I mean, there's lots of people that are providing, what I would think of as like digital life insurance, offerings, right?
Yeah.
So, Emma, I think is a good one. And there's plenty of others that are, doing, arguably the insurance, but digitized.
Right.
We think we're doing a little bit, a bit more, a bit above and beyond that. The other one that sometimes we get some comparisons to, it would be like a Manual Life and Vitality as a program. So that's the other one that, has incremental sort of value and benefits.
Yeah.
But, we view these as like still a net being a little bit different. We're trying to bring, Headspace, Dashlane, ClassPass, known brands. You would otherwise have to pay over $25 a month for Headspace, Dashlane, and ClassPass separately. We're just, including them in the package. It's just included as part of what you get from Walnut.
That's it sounds very unique, at least when I came across it, based on what I see. And from a consumer standpoint, if I'm a millennial, let's say, it's my first experience and, I stumble upon Walnut because perhaps it was introduced to me by one of your partners. And I go through, I purchase just a basic policy that's within my budget. And, I'm locked in $15 a month and it gives me the adequate coverage for that stage of my life because I'm just 20 years old. I don't have a lot of assets. I'm not really responsible for anything other than myself. But then like a few years go by and things change in my life. So how do I know to re-engage with Walnut? Are you prompting the end user in some way? Are you sending them notifications, reminders? How do you keep them engaged? Because I can see with all these other partnerships you have, how you could stay relevant to that customer and be very sticky. But are there other things that you do to try to prompt them along their life journey so that they'll know, oh, I need to go and re-engage with Walnut because some life event happened or something significant that's going to change my insurance needs? And again, I'm talking like an insurance guy. The average person doesn't think like that, right?
Yeah, absolutely. So, in the platform, we basically have 3 sections. We have the coverage section, which basically tells you what you have. We have the benefits section, which is the Dashlane, Headspace, ClassPass, non-insurance benefits. And the third section we have guides. So the guides are designed to re-engage you, provide content. Like some of it will be from our partners, like the Headspace. We've built a Headspace guide that you can sort of walk through even if you don't fully onboard into their platform just yet. Some of it will be more like, quizzes and ways for us to learn a bit more about you. So we'll ask you, do you own a home, for instance? Do you have kids? And this will help us be able to generate their targeted messaging over time as we get to know you better. And then we will, prompt you, over the years to see if you need, different coverage because everybody's sort of, life changes and we can't be like hitting you with an email every single day. No. We can't be the Gap and sending, 5 emails a week. But what we can do is give you a reminder, even if it's every few months that, we're here for you. You have access to, and you should use some of these benefits, use some of the cool things that, Headspace, Dashlane, ClassPass have sort of added to their platform, whether that be, new classes that they have or new content that you can explore. So we can give you, sort of prompts and reasons to re-engage. And then longer term, even if you said, hey, we want to be able to get now, I'm really interested in a whole life policy, something permanent. Yeah. I've moved beyond, the term. Yeah. Well, we would actually put you in touch with an advisor to have that discussion because right now we just don't believe that's something that you can do in sort of fulsome, online. And so, we stop at some point, like we serve a very specific audience. And then if you sort of graduate above and beyond that, we want to put you in good hands so that you continue that journey.
Well, that means a lot, and you're sticking to your core, and I think so. In a lot of ways, what you helped us understand is how you're taking insurance out of the file cabinet, and then you've really identified kind of what your sweet spot is and where your focus is. So I'm glad you mentioned that there is a ceiling, and then there's maybe an intersection point where you would hand off to an advisor, where the conversation might parlay into something like whole life. So that's really cool. So we talked about the problem, the solution, the origin story. What stage would you say you're at right now? How long has this been on the market for? And are you fundraising right now? Do you already have, are you raising capital? Are you bootstrapping? Where are you at as a company?
Yeah, we're barely over like a year old in terms of incorporation, but actually full time. I wasn't full time until October 2020, so we're probably a bit around 9 months or so in our journey. We raised the pre-seed round in November 2020, led by N49P. Highline Beta participated. Highline's done a bunch of insurance investments, so that's a great value add as well. N49P is Alex Norman and the TechTO crew. So they've been tremendous. They helped us find some talent recently as well.
Cool.
And so right now, we have digital protection live in Canada and the US. US term life will be live tomorrow in soft launch. And then next week we'll be live, proper. And then we will have some embedded partners going live in the next 2 months as well, both in Canada and the US. And then a individual Canadian term life offering later this summer. So we're just getting all of our ducks in a row, getting all of the integrations in there, and then we'll be live and we'll be pushing hard in the fall.
Congratulations. And you said a buzzword, integrations. I'm going to come back to that in a second.
Okay.
So on the fundraising piece, I'm just going to stay on that for a second.
Sure.
Did you start your efforts in Canada, and was that a struggle? What was it hard to get the engagement as a pre-seed company? Even seed to Series A. We talk a lot about that on this podcast. What was that experience like?
Yeah, I would say, I've been fortunate. I've known, Highline, I've known, Alex from N49P for a while. So, when I was out there saying, hey, this is like what I'm working on now, I'm interested in just chatting with you, like just to understand your perspectives on it, not even necessarily, fundraising, at this point. I just want to understand, what you guys are seeing in the space. You say you see way more deals than I do, get some feedback on, the way we talk about it and how we pitch it. So that was, actually surprisingly, successful in that we were able to raise it fairly quickly. We probably did in about, 6 weeks to be able to get all the commitments in, and then it probably took another, 4 weeks for all the paperwork. But it was a fairly efficient process. Some of that, I think, I'm fortunate to have an exit in my background. So hopefully some track record, helped a bit. My co-founder, Adrian, worked at Lee, worked at Fullscript, has a health background. I met him at RBC. So again, tremendous background, and he has, growth and marketing on his resume. So we were able to go out and, I would say in this market, which is a pretty hot fundraising market, it was fairly straightforward. I will never say easy, because there was a lot of meetings that we came out of that definitely did not feel like it was easy. But I would say it was on the balance, like a pretty fair fundraising process. And part of it is that I think everybody agrees there's opportunity for change in life insurance. It hasn't changed for 100 years. It's sort of the same thing as it has been in the past, but there's all this new technology. There's all this new data that's out there in terms of being able to target the right customers. There's all these new platforms that younger consumers are adopting. And so it's really time for insuretech to catch up. We talk about insuretech as being maybe 5 years behind where fintech is. If fintech now, they're all going IPO. There's a million neobanks. There's not a lot of neo insurers in Canada. There's very few that are even in this like life space. And we think of this as an international business, but even in the US, the number of neobanks versus the number of digital life insurers, you're probably looking at practically 100 to 1. So plenty of opportunity to be able to grow in the space and try to do something new.
I couldn't agree more. Were there any, because you mentioned you had an exit before, it's not your first startup that you've been involved in. Were there any mistakes you made the first time or lessons that came out of that experience where you're like, I'll never do that again? That maybe made the fundraising experience or even the go-to-market plan easier, or one or the other. It doesn't have to be one of those things.
No, that's a great question. I would say I made a ton of mistakes. First time entrepreneur, I don't know anything. I'm still learning, these days. My first business was Red Flag Deals. We built and we sold that, 2000, 2010. And, I would say one of the opportunities we didn't sort of take advantage of that was on the table was to think about it much more as an international business. So something that I never want to do again. And even with Walnut, like we view ourselves as an international business, and we've built it that way from day one. We have a Canadian entity, we have a US entity, the partners from a benefits perspective are international in nature and scope. They have brand name recognition, both in Canada and the US, the first markets that we're going after. And so how do you build something in this internet age that, ideally scales above and beyond just your home market, being based here in Canada? And, you can look at Shopify. Shopify is a, great example of, an internationally successful business, right here in Canada. And, for red flag deals, even, there was lots of things that came out after us that became more successful, more international. Honey as just like a Chrome extension, sold to PayPal, a Chrome extension for over $1 billion to PayPal, right? That's like a tremendous achievement and opportunity in the deals and coupon space. And there's no reason technically we couldn't have done that. Maybe we just didn't think big enough. So, how do we think bigger? How do we think about, opportunities above and beyond the borders? You still have to execute well. You still have to do all the things, the blocking and tackling, the boring stuff that, you do to run any business successfully. But, with the internet, and, we're a remote first company, like, how do we take advantage of this moment in time where there's talent, all over the place? They're looking for change because everybody has been sort of jolted into this post-COVID era. And what can we do to be able to provide, a product that sort of meets this day and time above and beyond just Canada?
I love the international first approach from day one, and that being kind of part of the mission, the way you were set up. And actually, I think a lot of Canadians, part of our problem is we think too small. We don't think big enough. That's a message to a lot of Canadians. Like, it doesn't mean there's no shame in just staying in Canada, but think beyond Canada, right? And especially if you're going to be a digital company or a tech company, to build scale, you really have to, think bigger than just one market. It doesn't even have to be Canada.
And there's nothing wrong with folks like, Wealthsimple would maybe be sort of the counter example. They're focusing, on Canada. They've done, a tremendous, amazing job.
I was going to mention that earlier.
Shooting the lights out. Yeah. And so you can do it. And I've done it for like a different, like smaller audience. But if you're going down the VC path, I would say it's much more likely that you want to build an international business. And there is also nothing wrong with building. And Red Flag Deals was a bootstrap business. We never raised any outside capital. And there's nothing wrong with doing it that way either. I would say if you don't need to raise capital, don't do it. Like, if you can achieve your goals without giving, other people 50% of the business, and as you go, probably more and more and more than that, and you can build a profitable, cash flow driving business, do that. And like, out West, like Andrew Wilkinson and what they're doing with like Tiny Capital, and that whole business, there's lots of examples, tons of different ways. You can be a Substack, newsletter writer these days and be able to build a fantastic business just, that way without taking on any outside investors.
Well, and the moment you take on outside investment capital, that pressure to reach massive scale quickly, and have that hockey stick effect, that pressure is on.
There's no free money. That's for sure.
No. So I want to touch on a topic. I'm not integration yet. I'm going to get to that. But there's a common word in insurance that's used to stifle progress and innovation, and it's the R word, regulatory. So you set up in both companies. You have two entities, one in Canada, one in the US. What do you say to, or what advice would you give to someone who's like, oh, I can't because every state's got a different licensing criteria? Was that a challenge for you? Or were you just like, I don't care, nothing's holding me back. I'm just going to go and do it? Because fintech and insuretech kind of suffer from that same challenge because they're both highly regulated industries.
Yeah, that's great. To me, that's the opportunity, right? Like, if it was easy, it would have already been done. Right. And so, when we talk about, insuretech being 5 years behind, where fintech is, for instance, fintech has figured it out over time. Basically, there's all these banking as a service providers. And nowadays, if you wanted to spin up a neobank, you could probably do that as one person writing code. And that wasn't possible, 5 years ago. I think if you play it forward, insuretech will be similar in that respect in the future state. And there'll be players that make it easier for you to be licensed. There'll be players that make it easier for you to be, a broker, easy for you to be able to embed products and services, insurance products and services into your platform. And there already are like sort of the sprouts of that, the beginnings of that. For us, we were, very, I'd say cautious at the beginning in that we knew we would have to allocate a certain amount of our spend. And that's part of why it makes sense to raise an insuretech. Like, we're working with McCarthy's. We worked with them, day one. They have insurance expertise and regulatory expertise. That was part of what attracted us to work with them. So I think it's really important to work with sort of the right firms that have that expertise in insuretech. And then you're going to need to make sure you allocate enough of the budget to do that, because you can't think about like, if I have to talk to my lawyers and I can't afford it, I don't want to spend the money. Like, you just have to be compliant. There's actually no, question, no if, ands, or buts. You are either compliant or you're not. And there's only one side of the fence that you can sit on. And so spend the money you need to spend. And then you can work on the business. It's like, table stakes to be able to play in insuretech. But the regulatory boundaries also give you that opportunity. That gives you, if you figure it out, then you have a leg up on everybody else who's starting. It's arguably why, insurance companies, banks, for the most part, have not been disrupted in the same way that media companies, as another example, like, Red Flag Deals was a media company. It's all about eyeballs.
Entry are higher.
Yeah. The barrier entries are higher. International companies, the Facebook, Googles of the world, basically just eat into the revenue of advertising and can do that over international boundaries. In banking and insurance, you have a bit more of a moat, a regulatory moat that we, with Walnut, with RBC, like, we thought of it much more as you give yourself more time. That moat is going to get breached, but you have more time before that happens to figure it out. And if you want to be, sort of the leading horse, and you want to, you might get a lot of scars doing it. But if you want to lead the charge and you figure it out, there's sort of a prize on the other side for being able to, get through some of these regulatory hurdles to be able to deliver a compelling product for consumers.
Well put, very well put. And I hope people are listening who are maybe discouraged by the fact that it is a highly regulated space. So I'm going to go jump into the integration piece. So that's another challenge. A lot of carriers are running on legacy systems, and it's like old DOS stuff that's been taped together with duct tape and Gorilla tape and you name it. And I hear a lot of this, especially in the life and health space, where it's just there's no opportunity to integrate, build APIs where you could be much more nimble in another industry. So have you found a way around that, or did that slow you down?
I would say absolutely, slows us down. Back to, I think that's still, part of the opportunity, because if you can figure that out, you can work with insurers closely enough to be able to do so. So we are doing some API-centric integrations, today. Does it move as fast as maybe we would like? I would say probably the answer is no. But that's sort of the evolution of the industry. Like, you talk to Ali at Fineo, he's been doing this for a while, and he's done some of these integrations now as well. Because we work on both sides of the border. We see that the US is a little bit further ahead. There are more life and health insurers that do have APIs, but this is coming. So this is a interim problem. This is a now problem. In 5 years, it'll be much better than it is today. Maybe in 10 years, it'll be, quote unquote, solved, and you can go like, full cycle via APIs. But if you want to be an innovator, you're going to have to take, some of the hits to be able to get out in front, and you're going to have to sort of work through these. And we've been fortunate enough to work with partners, that want to work with us, because they also sort of see that, mutually aligned vision, and they see the opportunity. So it's always trying to think about it as like, there's the risk and there's the opportunity. And, the risk for these traditional insurers is that somebody else does it before them and they lose market share. The opportunity is you can be the one. You can gain the market share. There is demand in the market for these products and services. People want to sell a product that you are manufacturing today, you're
Yeah.
just not making it as easy as it could be for them.
Yeah.
So,
Right.
how do you manage the risk and really drive home that level of excitement, that opportunity, the number of underserved customers, the ability to like really build a relationship with them over time,
Right.
do something, different in the space.
Yeah.
So, it's always going to be a combination. It's the carrot and stick. And,
Yeah.
when you can find the right partners to work with, that's really where you can make magic.
And I don't think we can sit on the sidelines and wait for the carriers to lead the innovation. I think, in fact, it's the opposite. The innovation from outside, companies like yourselves, you're like, I want to take your product to market. The more and more of that is going to create the burning platform
Absolutely.
for the carriers to take that step forward, right? And it's really going to just push them, give them that push.
And I think, like, you see it in other industries as well. Like, I think as soon as, competitor A comes out, we saw this all the time with banking, right? Like, if Blue Bank comes out with something, then Red Bank and Green Bank are going to follow suit really quickly, right? And
Yes.
like telecom is probably even worse. If Rogers announces something today, Bell is going to announce the same thing tomorrow, and TELUS and so forth. So if you get somebody that moves the stick forward, it'll actually move the stick forward for the entire industry.
Very
and
true.
I don't think, like, they all agree, they all know that this is where they need to go. It's trying to get enough momentum to push them there. And I think COVID actually probably did two things. One is it forced them to be much more digital in terms of how they think about their operation. Everything's remote. There was much more demand for life insurance and people thinking about death. So it was actually positive in terms of creating that momentum to go digital, faster. It also made them, realize maybe there was, a set of gaps for them that they need to patch to be able to get to that next level. So, how do they resource that? How do they prioritize that? And it's always, trying to manage the core business, but then also sort of build these offshoots and these sprouts for new opportunities for new business that you can bring in.
Yeah, very cool. So this, well, none of this was really planned because we kind of just took this our own direction. But I was going to ask you, just on the fundraising side of things, would you say you would treat fundraising, because I don't know if you're looking to do another round after this.
Yeah, we're going to fundraise again in the summer, so probably July timeframe. We've already started lightly talking about it, but we're so busy we haven't had time to do proper fundraising.
Well, I was going to ask on that question: would you say you would treat fundraising the same way you treat prospecting clients? Because in a lot of cases it's a funnel, and you can waste a lot of time talking to the wrong investors. Just because there's money out there doesn't mean it's good money. So what's your approach to that?
That's great. Like, I'm gonna have a shout out for Chris Newman and Commonwealth BC. Commonwealth BC put on this fundraising boot camp for Canadian companies that are looking to raise money in the US, I would say with more of a Valley focus. I took this and did this program after raising the pre-seed round. So I can say that, we probably didn't have the most optimal fundraising process. We had a Google sheet that we had, targets that we wanted to talk to, and we sort of updated them. And, we did it a bit more ad hoc than I think is best practice. I think best practice is to try to be able to go and do it within a more constrained period. So you have competition amongst the different investors, and you basically get to, pitch and learn really, really quickly, get feedback, get to the finish line, get offers, close, and then move on with your life and get back to business. So it doesn't become something that sort of stretches out, too long over time. So I would say that's probably the best case scenario. I think the reality is I'd love to be able to say I can just take, a month and stop doing everything else to fundraise. But, you still have all sorts of other things you want to do. But to the extent you can run it much more, like you said, like a funnel, like a sales process, and as much background as you can do, you might have to pitch, 100 investors to be able to get to whatever your, seed or pre-seed raise amount might be. But you want to pitch the right investors, people that would be, likely to write a check. So how do you go and do enough pre-research? Have they invested in insuretech if you're in this space? Do they write checks of this particular size? What are the things they might look for? Who is the right partner at the firm? There's lots of databases out there. Crunchbase is one, NFX is another, where you can get some of those signals. And then ultimately you want referrals. So I would, very strongly echo, and this part we did do well is most of our investors in the pre-seed round, we had some sort of referral. Like it's less likely you'll ever get sort of through the gauntlet if you just go in cold. So it's very, key to get, referrals from people you've worked with, other investors who are participating in the round and so forth.
Yeah, that's valuable advice. And you had mentioned it at the beginning, but I think it's worth repeating. Was it Commonwealth VC bootcamp?
Yeah, Commonwealth VC. Yeah, they have a Canadian founder-focused bootcamp.
Yeah, that's and that might be someone that I asked to come on to do a podcast with.
I can put you in touch with Chris. Like he's a Canadian. He has a heart for and wants to help Canadian entrepreneurs. And I think to your point earlier around how do we think sometimes a little bit bigger? How do we be a bit more ambitious, a bit more sort of bullish and what we can deliver? I mean, we have a ton of great Canadian companies. So how do we become, proud of that and really push that to the forefront?
Yeah. And you know what, just, and you can't be all things. You can't be good at everything. And just because you've created a great solution that the market needs, or you're an inventor or an entrepreneur, doesn't mean you're an expert at fundraising, right? So a lot of people are learning as they go. And, there is a beauty to that process, that learning process that you kind of have to go through in life and just in general. But I think a lot of people might get discouraged, or just, the cash burn is so severe, they just run out of runway. And, something like that, if anyone's listening, and that is part of the reason why we do what we do here, is the founder focus, right? So it's about helping other founders and learning from founders like yourself who have, it's not your first journey. So, you've got some things to share. So thanks for bringing that forward.
Yeah.
I appreciate that.
I think sometimes it's sort of like sales. It's like you're going to get way more no's than you are going to get yeses. So ultimately you got to develop some thick skin and, don't worry about it so much. It's, I can't remember who said it. It's never as bad as it seems. It's never as good as it seems. And just keep going and pushing forward. Yeah,
that's very well put. So, to kind of wrap things up, when people think about Walnut, and I notice I didn't say the I word, I just said Walnut. What do you want them to remember you for? And what do you want them to say about Walnut, your end use?
Yeah, we're life insurance as a premium membership, and we give you value now. So I'd love for customers to go out there and say, hey, I got life insurance. Yeah, I checked the box, but I'm actually getting all this value. I'm getting Headspace and ClassPass and DashPay, and I use these things all the time, and it actually costs me less, and I get, insurance. So it's just a tremendous, value. So I'd love for people to think of us as being able to deliver on that value, making it easy for them to take care of the family and loved ones. And then for our B2B partners, I'd love for them to think about us as sort of the place to offer embedded life insurance, to take away that regulatory and licensing burden, give them an opportunity to be able to retain their customers longer, drive more revenue, and really be a good partner, right? Like that's our whole goal.
Those are great things to be known for. So if anyone out there listening wants to learn more, how should they find you? What's the best place to find you?
Yeah, I'm easily reachable. You can reach me on Twitter at Derek Zito, DEREKSZETO. By email, derek@gowalnut.com. I'm sure you can find me if you want on LinkedIn as well. So just feel free to reach out. I'm happy to chat.
And the URL for the company site is
gowalnut.com.
Gowalnut.com. Okay. Sorry, you said that already, so I'll edit that out. Perfect, Derek. So
thanks. It's good.
Derek Zito, thanks for sitting down with me today. It was an absolute pleasure. I had lots of fun, and I do look forward to the follow-up conversation. Really excited to hear what happens in your second round of fundraising, and just as you grow in Canada and the US, and who knows, in other markets by the next time we talk. So really exciting stuff.
Thanks, John. Thanks for having me. I would love to help draw more awareness to the Canadian insuretech scene. I think there's a lot of things that are going on, still tons of opportunities. we're still very early in the cycle.
We are.
So, anything I can do to help the industry as well, just let me know.
Awesome. Yeah, we'll be calling on you for sure. So thanks again, Derek. Enjoy the rest of your evening, okay?